Welcome back to the Krown channel. I'm joined here today with my good friend, Mr. Brian Swan of fame, of FibboSwanny's fame, actually. And he's, of course, been on the channel before. So I do want to remind you that if you haven't seen that initial video, to definitely go check it out, just because Swanny has a really interesting story and he actually comes from a very professional background. So we won't go over that today, but I'm just going to hand it over to Swanny right now. And let's run through the markets. I want to see your thoughts on kind of what you're thinking about end of year, where we kind of left off last time, as you've pretty much nailed the market since we last spoke. So I'm just going to hand it over to you, man, and go for it.
Sure. Thanks, Krown, for having me on, man. It's good to talk to you.
Oh, pleasure.
Yeah, no, it's awesome. Let me get on some. Let me get my ugly mug off the screen here and actually look at some charts.
Some beautiful charts, baby.
Yeah, there you go. I got Bitcoin here. I'm going to run through a bunch of different time frames to kind of give you a gist of what I'm looking at and see where things are headed. I mean, the last time we talked, I can't remember exactly the numbers we were talking, but
we were in the 30s at that point.
Yeah. And I was buying. Basically, I was buying down there because I called a June low 10 months in advance, which worked out really well. And that had to do with a whole bunch of different things, Fibonacci and all my different analysis and all that kind of stuff. So it's been working out pretty well. The patterns have been holding pretty well. So I'm just gonna like we were just talking before. Let's go until it doesn't, right? Keep running until it doesn't, right?
Indeed.
so let's I'm gonna start out with the 4 hour, just to give you a look at what I'm kind of doing here in the near term. So I'm gonna go through a bunch of time frames here. So if you want to stop me, or so if I'm rambling, just shut me up or whatever.
Gotcha.
All right, cool. Starting on the 4 hour here. I don't know if you watched the first video, I talk about my thresholds, and I'll go through that real quick. So if there's anybody new watching, they'll kind of understand what I'm looking at here. I break down the RSI into bull and bear zones. What I do is I do a historical analysis. I kind of go back, a couple of years if you have the data, and you find the best fit time of where I think the psychology changes in the market. And so say, for instance, right here, and this is where I'm going to start on the 4 hour here, is back a little bit back on October, probably. I think we were back here when we talked, but this is where we went back into a bull zone. So this would be a buy for my system, and the ADX is measuring the momentum, and the momentum is for the bulls. So right here was a buy, getting in. But the interesting thing is I start my Fibonacci at the levels of where I think the psychology changes in the market based on my zones here. And everyone asks me, how do you build the zones and stuff? And it's not easy. It's one of those things that takes a little bit of practice, a little bit of experience, those kind of things. And it's something I try to teach basics of, and I want people to learn to kind of go from there and kind of build their systems off of it. But it's not easy, but it's a start, getting people to say, hey, where are the zones, that kind of thing. You just got to come and talk to me and I'll try to figure it out for you. But going into the bull zone here, I started the fibs at this level. And what I normally do, and I've talked about this before, is every time the market moves up to a certain level or gets up to a high and starts to correct back, I look for that 38.2% Fibonacci level as that minimum, and it didn't hit here, so you would not have rebought. And as it's moving up to this next high, it did come down here and hit, so you would have actually bought again at this point. And then worked its way up to the top here. The first level that I probably would have got out of was the 100% full retracement off the break of the 61.8% level here. And then you would have taken profit at that point. And then you would have still been long because you bought twice and you probably would have only sold half that. And then you work up to this point right here, and then it hits this next zone, which is the next sell zone, which is an extension off of this high and low. So I look at the 127 to 141 as the zone going forward. As you put the fib level here, and it works its way down. It was not a buy at this point, but it also stayed in the bull zone. And didn't go bearish on this correction, and of course we had some and we got some support there on the moving average, that kind of thing, and then we work our way up. So that's what we're kind of looking at. So what I did here was, since it broke down into the bear zone right at this point, The first thing is to reduce your exposure, because you gotta respect the bear when it actually happens. But one thing is like the second rule of my deal here is once it goes into the bear zone, there's a new threshold that's made, and that's what this line is right here.
Okay.
And the previous shallow fib has to have 3 settles below it, or 3 consecutive settles of the time frame you're looking at. Since we're in the 4 hour, you need 4.
Just 1 second. By settles, you mean closure?
Yeah, close
Gotcha.
of the
Okay.
candle.
Okay.
Yeah,
Okay.
yeah.
Got it.
Yes, yeah, 3 consecutive closes on the candle. So so once that happens, that would be a full out bear that you would want to get out of all your longs. So what would happen is you reduce some of your longs here, and then since it did not break this 38.2% level, you would want to stay on your longs.
Gotcha.
And even though it was in the bear zone here, it came down here and tested a few times, wicked through it, but never had 3 consecutives. So you'd want to stay on your longs, even though it's in the bear zone. But you did respect the bears when you get out here at this point, because you just never know if it's getting into a bear and the momentum starting to build. And that was also another sign that the momentum was building up and the market really wasn't going down. So that divergence there was saying, okay, maybe there's a lot of buying interest in this area. And then that's what happened, and we went forward. Now we just went into the bear to the bull zone here, low momentum. So it's not a super good, great buy, but I did go ahead and buy again here. So I actually bought down here too. So when this was coming down here and holding, it was in the bear zone and holding this, basically I would have put a stop, underneath if we got the 3 consecutive candles underneath, and then going forward. So now we're in the bull zone, not great, momentum's kind of low for either side. So it's a little bit more continued. This is all basically consolidation. We're just waiting to break out of it. But now the consolidation is with the edge with the bulls, since we're in the bull zone. So it was sideways to lower, and now we're sideways to higher. So I like the deal with that. So what I'm looking at is sideways to higher. And what I would also do to validate that is if I jump over to the daily, looking at the same kind of deal here, you move up to the high here and it works its way down. When it touched this 38.2% level at 57.9, that's where my buy was, because we're still well into the bull zone. So when I'm working time frames together, when the 4 hours holding the previous shallow fib right here, and the daily is hitting the shallow fib and it's in the bull zone, that's my confidence to say, okay, let's buy here.
Just a short-term correction, basically. Gotcha.
Yeah. And it's always nice to have a short-term correction at the 38.2% level at the shallow fib is what I call it. And to me, that's a more bullish signal than when it corrects all the way back down to the 61.8%.
That's how I've learned my fibs as well. Yeah.
So basically on this, you would have bought and you would have sold out at the 200% here on this extension, and then you would have rebought back. And that's kind of what happened here on the daily. So right now, with this being in the bull zone and the momentum still with the bulls, the next zone I'm looking at is I took the trend line break objective here. Basically, it's just the measurement from the furthest point to the trend line, and then you take the break point to here.
Okay.
I wanted that because when I look at this extension, I'm using this high so far because we haven't had 3 settles above this high over here. So I'm using this as an extension. So right now this is my trade zone. So 67.9 to 72.3. And then the trend line break is right there at 71.5. So that's where my next area is to sell out and take profit on this move to the upside on the daily, as long as we stay in the bull zone, of course. And then that's where I'm at on the daily. So right now everything's looking good there. We move out to basically I use some Elliott wave. Just again, I don't trade off Elliott wave. I use it as a guide, just to kind of say, okay, where could we be headed? Those kind of things. And I've been on this count for a long time, and it's been working pretty well. Like I said, keep doing it until it doesn't, right?
Works until it don't.
Yep. And right now, the way this is kind of held here on this area right in here, basically on the daily where we bought on that shallow fib, it's holding there, and it looks like we're starting to build possibly a wave 5 to up to a wave 3 here, which would put us in the 74, 79 range. And then maybe we would correct back these aren't set where they exactly would be, but
Right.
just as a guide, where if we get up into this zone and correct back, and then we go up into a December high, that could get us up into 80, 90, 100,000 if this kind of holds true.
Very
Still,
interesting.
and I'm still on that pattern, and I still want to kind of keep that going.
Yeah.
And one of the reasons that I'm staying on that is when you look at my weekly chart, we've been in the bull zone for a while here from back at this point. That's where I start my fibs and I work my way up. Interesting thing is when I start my fibs here, based on my threshold, the 61.8% held right here off of this low and high, stayed in the bull zone, didn't click down. So that's telling us that this is kind of holding true going forward, blah, blah, blah. And the momentum's with the bulls. What I liked about this, and I've taken a couple different things. I've taken the fib extension off of this high and low on the blues here. I got the 200, the 300, the 5, and the 8, all fib numbers, and that's how I kind of looked at things. And then the high, basically I took a trend base extension up to this one, came down, did not make a low, so we're on this next extension up. So you got a 2, 3, 5, 8, and 13 here. So what I'm looking at is these zones that are kind of, overlapping each other.
Right.
But this zone here is what I was really watching, and I filter everything, no matter what, if it's a trend line or a fib level or whatever. I filter everything with a 3 consecutive settle or 3 consecutive close.
That's what validates it for you.
Yeah, and whatever time frame you're looking at is what I use. So when I'm looking at a weekly here, I want to see 3 consecutive weekly trades above this, and it did not happen here. So this is where you trim or take profit and then work your way down. This is your buy on the way up. And I think we were right around in this area when we were buying and talking that it was going north, north from that point. And then it worked its way up here. But if you look here, we've had 3 consecutive settles or 3 closes above this line. So to me, that is the bullish signal. And when you look at fib levels, if you look back historically, when this kind of action happens, the probability is really high that it moves to that next level. So now that it's broken this, we're looking at 86 to 89 as a minimum, working its way up to that December timeframe.
I have very similar targets, extremely similar.
Nice. So, but what I was looking for was that 3rd consecutive weekly settle, and it happened last week. And I'm like, good, that's perfect. Good weekly close, nice and bullish. So I think we can work from this range up to, I say a minimum of this. Some others are up at 100 plus. My maximum would be about a 137 or so.
My maximum is 135.
Nice. So I'm looking at that kind of zone right there, and we're in the bull zone. Everything's looking good there. Another thing that I kind of
actually, Swanny, if you don't mind me stopping you for a second, do you use fib based log scale?
I do not. I never.
Really?
Yeah. The only thing I do on log scale is the price.
Gotcha. Okay.
I do not. I mean, don't be wrong. I'm sure people can use it for different analysis, figuring all that out. But when I'm working with fibs, I look at price and fibs completely separate. I don't really care what the price is. I'm looking all about proportion. So to me, I use the linear on the fib side because I'm really just measuring proportion. I don't really care about what price is doing. But I know in the early days, or not early days, but with Bitcoin and stuff, if you're looking at a log scale, it's working pretty well in a lot of different markets. But I think when markets mature, and if you go out and look at traditional markets and try to use it there, it kind of breaks down a lot.
Yeah, it's not going to work there.
Yeah. So I just generally don't use it. And I just, I'm not going to say no, don't use it, because I'm sure you can find ways to use it and make your strategies better. I just look at it separate. It's all about proportion to me. So that's what I'm really measuring.
That makes complete sense. I mean, once an asset starts moving like fucking X's rather than percentages, then, it makes sense to have the fib based log scale. But yeah, you're 100% right.
No, I try to use it
in traditional market, it does not work.
Yeah, at least it hasn't for me. But if someone's using it and it's working for them, congratulations.
Fair enough.
Run with it. But yeah, I do linear scale and then log scale on the most of the time log scale. Every once in a while I'll do analysis on linear scale on price for different reasons. And actually I'll show you that on the monthly, but the weekly here I like, so we're kind of talking bullish there, which everything's working pretty good. So we got to kind of go with it. Um, no, I did this timing a long time
Yeah,
ago.
this was super interesting last time. I want you to get into this, man.
Yeah, one thing I'm looking at here, which is there's a lot on here, but the main gist of what I'm looking at is I started out. It's just the mark of the halving to halving to halving is what it
Okay.
was, and I did a couple of different things. I did a halving to high, and that's what these orange
Okay.
timings are. I did a high to trend line break, which
Okay.
is these blues. So in other words, when you take the lows up to here, and then once it made a high, it broke the trend right around this point, somewhere right around in this
Okay.
area. And then same here, there's a high to trend line break. So if you take that same timing on the blues here, and then right at this point, right at there, it broke the trend line right on the
Whoa.
timing.
Okay.
So now the interesting thing is I'm kind of watching this timing go out right here. It
Yeah.
tried to break it here and it never did. It never got the 3 consecutive settles on this
Right.
point.
It's
But
still
now we have,
50% down though. I mean, that's I don't
yeah,
look at
no,
that
it
as a
was definitely a
failure.
break. Yeah, it was
Right.
definitely a break, but it held the trend
Yeah.
line,
Okay. I
or
see
at
what you're
least the
saying.
previous lows.
Right.
And if you take the timing out to this point, we're looking at February of 22, which would make sense because if we work our way up to make a December high, and maybe even goes on higher into the next month or so,
Yeah.
if we start to break down, that trend line break could actually happen, in February. Or this could be your support guy going forward off into the future to figure out where that trend line break
Yeah.
would be. So, but if you look at it from a timing perspective, um, the timing of this would be right around there, or it kind of keeps going up and then you don't break until December of next year. But I feel like a correction could probably happen after it makes up this cycle high, and then
Right.
we work our way down. The other point was that some of the other timings on here where they all match up. That's what all this is. So a lot of the timings are matching up together. So this is where December 27th comes in as a high
Okay.
possibility. It's just based off all the cycles. I'm sure everyone has different ways of looking at the different timings. But I also put the fib level on here, starting from the halving to the high. So the halving to the high, and then you
Okay.
mark out the 2, the 3. An interesting thing is there was a break here on the 2. There was a kind of an interesting inflection point here on the 3. It didn't break until this point. And then they had the halving, and then you work your way on. And then if you do the 3 to the 5 made the high, and then the 8 that's when we broke into a new high. So it's interesting on what's happening on the timing of this too.
Yeah.
And I mean, the 13 is not until way out here
Oh wow.
in 26 when all of this shit comes together at the same
Yeah.
time. So we'll see what happens when we get there.
Armageddon.
Yeah, but the main thing is I'm watching this trend to the high to trend line break. It didn't break the trend line here, but it could here. But we were talking up at 70,000 on a break after we make hopefully new highs. So that's what I was
Right.
kind of looking at on this timing. But there's a lot on here and it gets kind of crazy. But that's all I kind of
So
want to show you on that.
if I understand properly, those trend line breaks basically they mark the end of the cycle for you. Like it's time to be looking for major lows after that.
Yeah, that's when
Right.
that's when your larger corrections are going to happen.
Gotcha.
I'm gonna mainly be looking at like my daily here. If this breaks down into a bear zone, that's more of a correction for me. Because like back here when this happened, it broke into a correction, and then you rode it, rode it all the way down to some lows, got into that point, that kind of stuff.
Would
But
it be
yeah,
fair to Swanny? Would it be fair to
Yeah.
say on your fib or sorry on your RSI bull and bear zone, is it mostly correlated to the current trend on that time frame?
It is, because that's one of the first steps. Is what you want to do is you want to go back and look and just draw just basically a shitload of trend lines. And
Gotcha.
what you want to
Okay.
do is you want to validate which ones are the ones that have worked in the
Yeah.
past, and then you break those down, and then you go into a little bit more of, okay, was there momentum? How much? There's different steps on
Okay.
what to take there, but generally the trend is the first thing you want to look at, and when those trend lines break down. But a lot of times you'll find where this, to me, the psychology doesn't change until a certain point, even after the trend line break.
Yeah.
It's sort of like everybody talks about a golden cross. Well, the golden cross sucks in the first 3 days or 5 days or 10 days.
Yeah.
It's the long term that matters. So
Exactly.
so to me, that's when there's a change. But when does the psychology actually accept it? And then to me, that's where I'm trying to measure. So it's a little
Gotcha.
different than all these math-based algorithms and stuff. It's a little bit more
Right.
of just
More of an art to
experience.
it.
Yeah, a little bit more of an art, and then you try to add the science to it afterwards.
Gotcha. Gotcha. And for your DMI right there, what are you using that in comparison to the in comparison to the RSI?
Mainly, I'm looking to find where the best placement is for the starting my fib. Once I break into a bull zone, I will look up here, and if there's a crossover, that's where it'll happen. But if the crossover happens earlier, I don't know if there's an example here. Let me see. Yeah, it's not a good example there either. Trying to think of like, so what I'll do is like, if this crossover of the green positive crosses up through the red negative, if it happens back here, what I'll do is I'll find where that cross happens, and then the first time I have a positive change over change on the ADX, which, whatever you're looking at, a daily, one from one day to the next, if it's a positive change and the cross happened back here, I would actually start my fib back down at a different level based on where that crossover is. In this case, the crossover happened right.
So that matters more.
Time. Yes, that matters more. On where the placement of where I would start my fibs. So if it happened back here, this fib would start back here, and then the levels that I would buy and sell off of would be from that point. But this one happened right on the exact. I don't know if there's another example. So like this one happened here, but the crossover didn't have the positive change until that time. Here's a negative one. This might be an example here. No, because it was positive change. Yeah, it's hard to tell. And another thing is I don't look at it visually. If you ever want to look at, what I'll do is I'll go up here and you can export the chart data, and then pull up the actual numbers, so you'll know what day you actually have a positive change over change instead of trying to visually looking at it. So there's that for anybody that wants to pull up the data. But yeah, that the crossover and the positive change on the ADX is what I'm really measuring here. And I use the ADX for a lot of other things, but for when it comes to threshold, that's what I'm using it for. Because so RSI comes first, and then I'll place the threshold based on where this is, and then you look back at previous fibs. Has it broken the 38.2? If so, then yes, you buy, or yes, you sell, depending on what direction you're going.
Understood. Okay.
And then and I was just looking at the timing stuff here. Any other things before I move on?
No, go ahead, man. That was that was perfectly explained.
All right, cool. I wish I would have worn my sunglasses. You look cool. Man.
Man, I just had to explain. I actually just had I'm not trying to look like fucking Ray Charles. I actually just had I just had a laser eye surgery actually, so recovering from that, and the bright lights are kind of sensitive.
Oh, okay, I just thought just trying to be cool. You know what I mean?
There is also that as well. My girlfriend thinks that's rather funny.
All right. So where were we? Yeah, just on the timing, I'm looking for the high up here and possibly trend line break in February. Moving on to this one, I've been following this one for a while. This is just kind of it's a modified shift, for pitchfork, whatever. Interesting thing, high to high here was 1477. If you go from high to high on December 27, it's 1477. I don't know if that'll work or not, but timing wise, it's interesting when you go from high to high, maybe we'll hit the high here.
Actually, on that topic, do you have an opinion on the lengthening cycles debate?
Lengthening cycles on what?
Bitcoin. Meaning like
in what sense?
Meaning from cycle to cycle, like it takes longer and you get some diminished returns upon that as well. Because right there, you're kind of postulating, I suppose, that from cycle to cycle, it would be actually about the same then, which is actually really interesting, man. Just as like a random thing that I was looking at today, it's fucking strange, but the cycle low from 2015 to the cycle high of 2017, that like $200,000 to $20,000 number, that was 1,064 days, and we are literally 1,064 days away from the current low of 2018, 2019. Just as a random fact. It's weird stuff.
Interesting. Yeah. I mean, right now, if this kind of pumps up beyond this point, then yeah, I think lengthening cycles would be interesting, because like you're saying, the other one was only 1,000. This one's 1477. Right. Maybe we go a little bit further. But right now, I'm just measuring. What I'm doing here is this midline right here
Yes.
is what was really important to me for a while. As it broke up here, same thing. This is a weekly, so 3 settles above it, 3 consecutive. It did not have 3 consecutive the other time. It went down second week, and then it went back up. So this was support, and then working its way up. And then I'm just using these other levels as areas of support and resistance. Hit it, basically rallied up here, and then it crashed back down because it never broke that point. Touched there, went back above it, but we went back but down here. But we've held this line here a few times, and we're working our way back up. I know it's kind of probably hard to see, but what I'm doing is I'm just watching this kind of like, I just put these like weird ass things in here, but
right. But I mean, you're treating it as like a parabolic advance, basically.
Yeah, exactly.
Gotcha.
So right now, we made the new high and touched this yellow, but we're working our way down and we're touching this line right here. So if this is pretty important, because if this breaks down, then it's over. You know what I mean? And then, because to me, once this broke down right here, then we went into correction.
Right.
Yeah. So, but the interesting thing is once we got into this time frame, we got that parabolic move really quick over the November to December time frame. So if we do get that and it ends up breaking this yellow line, which is right around 70K or so at the moment, a rally up to this point is up into that 127 to 130 area. If it's going to rally up and hold above this parabolic move, or if it breaks down. If it breaks down here, most likely you're probably going to see the daily breakdown into the bear zone, because it'll start to break down. The whole Elliott wave count will be done, all of that. So I'm kind of looking at or watching this parabolic move right here. So it's interesting that we're bouncing off of it at the moment, and it's still kind of holding. So I still want to say that we're still heading higher and everything's still looking bullish until it doesn't.
It's kind of like a do or die moment.
Yeah, exactly. So, and we're right there. And today we're actually, we're consolidating, but it's not really super bearish just yet on these other time frames. So I'm not too concerned just yet, but that's what I'm kind of watching here. So if we break above this yellow, the 70, that's when I think it'll really, really kick. And we can go from 70 to 80,000 in a heartbeat. So I'm kind of hoping that happens. And then on the monthly, I had a timing on this one. I actually use linear scale on this one because it's just it's a monthly, so you had to go back far and it makes it look better. But if you look at these lows, the timing of these lows,
holy fucking moly!
That's where that June low came into play.
Yeah,
and a lot of fibs worked out, and it all worked out really well. That June low was the spot to be, and worked out pretty well. But when you look at what I did was I just put this sine wave on here. From the low to the high, just so you can see the movements here.
Right.
So you get a little bit of consolidation here, and then it made a low at this point, and then it moved up, made a high at this point, consolidated, made a low at this point, consolidated, and then at this point it broke out to a new high, which was interesting. And then it worked out to this point, and then it made the low right here on this one. So if you kind of look out, kind of getting into this area where it consolidated, and then the next one is that December high timing that we're talking about, and December 27th is where this one kind of comes out to be on this timing and this timing. That's where that December 27th comes out. So that's the area of December that I'm looking at. So what I'm thinking of was this latest monthly close that we just had was the greatest or the highest one that we've had, the highest settle on the monthly. So to me, that's that area I was really wanting it to settle above, and it did, and that's a good deal. So now this whole 58K level becomes even stronger support, and then when you look back at my daily, that's that shallow fib. So all of a sudden, this shallow fib becomes really, really much stronger. I feel when you're looking at it from the monthly standpoint. So now I think we could probably get up into the 74, 79 for November, and then if it kicks up even higher, that's where that 89 on this extension would come into play. Or if it really wants to get all bonkers, it would be up to 100, 110 on this next extension. But I'm looking at this kind of parabolic move here. over the next couple of months, which makes sense when you look at this and you look at the different timings of things. Everything looks pretty good there. So that's what I'm kind of holding my ground for, and waiting for those sell orders to hit up in these areas and take some profit.
Gotcha.
But so that's where I'm at. I mean, on Bitcoin. Is there anything else you want me to tackle on Bitcoin? But
Man, that was about as perfect as you can fucking get, Swanny. Holy shit. I'd love to dive into Ethereum if you can. So you got some Ethereum charts over there.
Yeah, I got some other ones on here. Ethereum has been working like a freaking charm.
Yeah. Oh yeah.
And all of these marks here. I did a video a little while back. I was showing people how I did the fib moves, because we went into the bull zone back here. Even though it went into the bull zone and then crashed immediately, it didn't go back into the bear zone. So yeah, you got to sweat your balls off a little bit here while you're waiting. But as long as it didn't get back in here, you were good, and then you went forward. So all the blues are the buys.
Okay.
Basically, if you took the fibs and started it here, and then you work up to this point, that's where the buy comes in. And then if you move it up, and then that's where the sell was, based on other things. I just don't have all the lines on here because it kind of gets kind of crowded.
Yeah, it gets muddy.
So what I did was I just showed, if you did the fib thing that I just explained before, this is where the buys are, this is where the sells were. And that's where and we just went into the bull zone here. I bought here. It actually went down to the shallow fib, so I bought again. It actually dipped down a little further, kind of tested this area in here, worked its way up. We just sold yesterday on a profit. That's what the red's for. Shallow fib now is at 44.50. So if it gets back down to 44.50, I'm buying again. And then the next level I had for a target was 4,700. That was based off some other stuff that I had on here that I took off to clean it up. So I just kept the line on there, just show where the target was. And then another thing is what I'm looking for is 3 consecutive settles. This is another thing that I think is really interesting, and it works really well. If you're doing an extension like this and you get the 127 to 141, if you get 3 consecutive settles above the 141, the probability of going to the 200% is really high. So if you actually go back and analyze that historically, it's pretty interesting. So what happens is this zone becomes support. So now when it comes down into this level right in here, if you're following this at 2504, this could be a spot where a lot of buying interest could come into the market and pop it back up. I'll actually wait for a wick down to my shallow fib, because I got plenty of positions on, so I don't need any more at the moment, because I think right now I buy in 10% tranches. So I think I'm like 50% long on the bucket that I like to trade for Ethereum. So I'm pretty heavy in it at the moment. So even with this sell, and if there's going to be a rebuy, I'm long pretty good. So now if you're following the system that I look at, 4,700 would be the next level. 4,850 would be the next level after that. So so everything's working really well on this. And even though it went into the bear zone right here, it was just a little area of consolidation, and it never broke down below the previous shallow fib like I talked about before. So you kept your longs, and then went right back into the bull zone. I don't know what in the hell this was, but it happened.
Little trappy right there.
Yeah. And a lot of times people ask me, well, if that happened, do you want to readjust your zones? And I do when I get little things like this on, like, well, maybe this needs to move and this didn't work right. But what I'll do is I'll look back historically, I'll change it to where it wouldn't. And then I'll go back and look. And if it messes too much up, then it's not worth changing. So in other words, the zones are still working, even though you had that small little anomaly right there. So so we're back in the bull zone. Everything's working out. What I like is looking at the daily here. If you would have bought on the daily into the bull zone here, you would have actually taken profit like we did yesterday. And then the 4240, actually that needs to move up a little bit. No, that's right. 4240 would be the area to look at on the daily. But just like I talked about, the 141, since we're looking on the daily, if we get 3 consecutive settles above 4601, then 5409 becomes my target.
I do have targets around there as well, actually. That
Yeah,
is
and right now
very
it's
interesting.
holding and coming off. So it
Mhm.
never had the 3 consecutive. So in other words, this was the area to trim, which we did,
Yep.
and then hopefully some rebuys. So yeah, 3 settles above 46.01, and I'm not selling until 54.09. So that's what I kind of look at on there. So that's what I'm looking at on Ethereum. Everything's looking pretty good on my fib strategy going forward. So
Yeah, man. That one plays very technically, I've found. It trends and it really rewards you
yeah.
with those
And,
moves,
and, and
man.
a lot of people ask me, does this work in all markets? Yeah, traditional,
Hmm.
all the coins. Like if you look at Matic, for instance, this thing's working like a freaking charm. Like if you followed this one, you bought on the bull break right here,
Yeah.
went up, and then when it made this high right here, it came down to the 38.2% level, and then you
Oh,
rebought,
beauty. Just beauty.
and then you worked up to this point, and then it didn't hit.
Damn.
It hit the target right here, came down and hit the 38.2. So you actually sold
Perfect.
and rebought right there, which is awesome.
You
And
are
then when you
right
move
in
up,
line with the algos right now, man.
yep, and right at this point, came back right down,
Love
and
it.
then you actually rebought the shallow fib, and now we're going again. So you bought, sold, bought. It's been nice. It's
Yeah.
been working
Oh, yeah.
perfect. So yeah, it works for all the different coins. The thing is you just have to do the analysis of where the bull and bull bear zones are for every coin. That's the way I like it. I'm old school. I like to do it
Mhm.
manually. I'm not an algo guy. I like to go out and actually do it myself because I've just been doing it a long time. So I like to be in the chart. I like to like physically look
Be
at
one
these
with the
zones
charts,
and
baby.
yeah, exactly. So right now the shallow fib was bought,
Hmm.
um, and same kind of thing that I talked about before. I'm looking for 3 settles above this 212. So far we didn't. But if we do, then that next target's going to be up here at 259.
Yeah, big
If that
time.
happens. But right now we're looking probably at a probably another shallow fib buy, or if this breaks down into the bear zone, then you just get out of your longs, which you're probably back in here. So even if it breaks down right here, you're still in profit. So
Right on. Right
so
on.
right now it's working out
So I
pretty good.
take it that you're not averse to looking at altcoins and whatnot. Do you trade these as well?
Yeah, I'm actually in
Oh, you do?
Matic. Yeah. No, I don't do a ton,
Yeah.
but if I have good setups like this,
Cool.
I'll jump on them.
Do you have
And I'll
any altcoins that you particularly like? Just out of curiosity.
like just for their purpose or just for trading.
Actually, both. Both now that you mention it.
um, to be honest, not really. um, I there's certain ones that I like
Yeah.
for certain things, but
Okay.
I'm a privacy guy,
Uh-huh.
so I like privacy plays.
You like the
So like,
Monero?
yeah, like I got a bag of Monero,
Ah,
and I got and like some diamonds in the rough, like Oxen, for instance,
never heard of that
which
one.
is a exactly. But just wait.
It's so
But they
private.
yeah,
Exactly. There you go.
basically it's a fork off of Monero, and
Ah, okay.
they really
Okay.
focus about privacy. Basically, their
Gotcha.
whole goal is a private internet and all that kind of stuff.
Okay,
But
sweet.
I mean, there's little things like that I like. I typically stay toward the top 10, top 20 if I'm going to trade. I don't do
Yeah.
too much craziness. I get a lot of requests from a whole bunch of people, so
Exactly.
the cool thing with that is when I do my analysis, if I see really good setups, that's when I'll usually jump into them if I see a
Right
good
on.
setup or not. But I really don't just kind of like a coin just because I like a coin. I'm just not into it like that. I think a lot of them have really good purpose, and I think
Mhm.
some of them are going to do really awesome shit, and later on, um, like some of the DeFi stuff and some of the new metaverse stuff, like
Yeah, that's very interesting to
all
me
that.
as well. Very,
Yeah,
very interesting.
I mean, it's interesting for sure, and I like the future, but it's I don't really have any. I mean, I have Solana. That's another one I'm in. Just
Yeah,
bought into the bull zone here.
it's a hard one not to
And
like, man.
actually, this was nice. We bought right
Hmm.
here. It already hit the fib extension, so we sold, and now we're looking at a rebuy at 220, and
Yeah.
then you work up to the next target, which is back here. Because now that it made this 3 settles above 216 right here,
Yeah.
this extension comes into play. So
You're
my
looking
next target,
250, 260.
yeah, exactly. So hopefully I'll get a rebuy at 220 before that happens. while we're in the bull zone. So yeah, I mean, I'll look at different coins, but I just don't really have any favorites. I lean
Gotcha.
toward Bitcoin, Ethereum, and top 10, top 20, somewhere around there.
Oh, here we go. Market's moving right now.
And of course there's sand. You know, people wanted that one. That one's
Oh,
working
yeah, that's popular right now.
out. I don't have it, but people asked for it, and that's why I had it on here.
Yeah.
But that's where I'm at, man.
Yo,
Anything
so
you want to talk about?
yeah, man, actually, I want to just ask you a few questions. So just out of curiosity, so you have a very well-defined strategy and everything. And I think that's, I mean, just something to kind of focus on for a second, just because, you know, a lot of people, when they come into trading, like they think that you just kind of go by intuition, and maybe there's a little bit of that, yes, but it always comes down to like a very strict strategy. So my question to you, man, is how often do you, or do you at all change it, based off of, you know, new things that you're learning, or new things that you notice?
I do. But it's interesting because like it took a while to figure this out, and
Right.
now what I'm doing is I always do look for things like if there's other
Mhm.
indicators that will enhance it, or uh different way of looking at something. You know, I'm always looking at different things like that. But the whole reason that I brought this out to everyone, because I've been using it for a while, and it's been working like great. So it's like, you know what, I'm going to share it.
Yeah.
You know, just it's sort of, it sounds kind of weird, but it's kind of like a almost like a legacy thing.
Yeah.
I want
Yeah.
people to take it, break it apart, learn from it, use it as a tool to enhance your strategy.
Hmm.
You know, and that's really the goal, is to like, okay, I have this, now how can we make it better?
Yeah.
That kind of thing.
Well, the
And
thing
yeah,
is
there,
that two
and I'll
different
look at it.
people, yeah,
Yeah,
sorry to cut you off, but two different
no,
people
no.
can trade the same indicator or same strategy, whatever, in completely different ways.
Oh,
So that makes total
absolutely.
sense to me.
Yeah, yeah. And experience comes into play too. I
Hmm.
mean, if you've been doing it a long time, you'll find certain setups that even though I call them nuances.
Yeah.
Like if certain things are happening in your strategy, but you know damn well that it's not the right thing because you've been doing this forever, then
Hmm.
I'll do little things like that. But most of the time I'll stick to strategy.
Right.
99.99% chance, you know, that that's going to happen. um that the whole goal was to take emotion out of it. I just wanted to like, okay, this is what it's saying. And it's interesting because when people first come on and work with me and stuff, um they start freaking out like, oh my gosh, it's like it's beyond the shallow fib, what do I do? I'm like, dude, just chill, just let it just let it run. That's the whole point. Take the
Yeah.
emotion
Yeah.
out. If it falls out and back into the bear zone and we take a loss, who cares? Move on.
Yeah.
It works over time.
Always the next
um
trade.
yeah, and one of the things you got to learn is you're gonna take losses. Nobody just makes
Yeah.
perfect algorithms. It doesn't work. So you have to be willing to take the losses when they happen. And then but when the loss happens, that's when I go, okay, what happened here? Can I adjust what I do to make that not happen again? And sometimes the answer is no, and you can't find anything about it. And then you
Hmm.
just kind of keep going on and you take the loss and you try to learn from it. And if you can't, then you just move on. And if you can learn from it, that's when you can start adjusting things and say, okay, well, let's try this, and then change it, back test it. Did it look better than last time? And if so, let's run with it. If not, then screw it, move on.
Right on.
So, but yeah, the main thing is I really want people to use this as a tool. Um, I don't want people to just mimic it. I want them to take it and learn from it, use it as a tool to make their strategies better. That's the whole goal. Because
I
I
like
mean,
it.
you know, I'm not a signal shop. Don't come to me and say I mean, just don't mimic exactly what I'm doing, because then you're not going to learn.
It's
And
not
the
only
whole
that you're
goal is
not
to
going to
learn.
learn, like it's probably not going to work for you anyways, because then you got to do every last little thing exactly the same. That implies like everything in your life and preferences and whatnot is completely aligned, which is just
Oh yeah, yeah. Oh,
completely
absolutely.
unlikely.
Yeah, like my book is going to be completely different than someone else's book.
Right.
You know,
Right.
I got when I'm buying 10%, that's a certain bucket of a certain level, and it's a certain percentage of my overall portfolio. And my portfolio is going to be completely different than yours. And maybe I'm buying more or less at this point, and it doesn't make sense for you. So you can't really mimic, because then that's when it'll explode on you. Because your book's going to look completely different than mine.
Yeah.
You know, that's just the way it is. So Um, so I
Looks like
try
we're
to
getting
tell people that, but
looks like we're getting your pullback right now, actually.
all right, let's do it.
Don't think that's Ethereum doesn't want to pull back that much though, man. I really
Yeah,
want that
Ethereum.
4550 area as well, but
Yeah, they
we'll
yeah,
see.
4450 is what I'm kind of looking at on the Ethereum level. Maybe we'll get it.
Got to pray to the trading gods right here. You got any opinion on today specifically, just with FOMC coming out and everything, all the fun stuff that brings?
Yeah, you were mentioning that before we got on, and I was trying to look at my there's a whole bunch of stuff on this one. I haven't even updated it yet.
Yeah.
Based on the zones and stuff, but the latest one is the bull zone right here. And actually I haven't even done this yet. So here's an example. When you look down here into the bull zone, the crossover actually happened back here.
Okay.
Instead of right at this point.
Right.
So what you would do is you look for that first positive change over change, which is right here.
Okay. So when it gets like a positive slope on the ADX.
On the ADX itself.
Gotcha.
And then, so when you look at that positive change over change, and I'm just eyeballing it, the fibs would actually start right at this point right here.
Okay.
Instead of the threshold point. So to me, and that's where the psychology changes, and it's kind of interesting because it's right on the moving average, which is nice. So that could be a break of that, and then that's where I would take my fibs from, and then you would do the kind of the same deal as everything else. It worked its way up. Did not happen there. I mean, it's been on a major bull run, so it's really hard to get the shallow fibs on this one. But if you're following the system, you would have bought right here, and not actually you probably would have sold at that would be the 100% level right there on the full retracement. That's probably where you would have sold, and you probably would have been out, and you would kick yourself because you wouldn't have been in it. But then the next level is that 127 and 141. Interesting thing is since we're above that level on this, the 4671 is still open to being hit. But who knows if that'll happen or not, but the probability is pretty high that it will. But yeah, when it comes to what's going to happen here in the traditional markets, it's got a lot of room to crash. Put it that way. But right now everything's still bullish and not even close to getting into a bear zone. I mean, the correction could be not very much and taken off, but like you said, depending on what words come out of Powell's mouth, all he has to do is say a certain verb.
He's
in a certain way.
He's never said anything that's hurt the markets. I'll put it that way.
Yeah, exactly. So to me, I feel like on this dip right here, if he says something that's positive, this thing's going to make new highs pretty quickly. What are your thoughts on it?
I mean, trend is your friend until the end of the trend, and right now it's very much the upside.
Exactly.
Hey, Swanny, I got another very question that's kind of burning on my mind right now, man. So a little bit of a different kind of look on this, but psychologically,
maybe that's your eyes burning from the surgery.
Got my laser eyes installed, baby. Going to the fucking moon.
All right, go ahead. Sorry.
So this is a great question to ask someone like you who've had so much experience in a more professional sense. If you could go back to when you first started learning to trade and technical analysis and all that good stuff, what would you have told yourself? Like, what would you have really wanted to have focused on?
That's a really good question. I would have focused a lot more on risk management.
Yeah.
Because when I first started, it was just really all about the gains. It was just like, oh yeah, look at that. Yeah, look at this. I made that. I made this. So it actually took me a while. It really took me a while to realize that I'm not going to beat this thing. I got to learn how to manage this thing. And for me, that was 2-3 years into it before I even freaking realized it.
And how old were you at that point?
26 maybe.
Okay, so you got started young too.
Yeah, 26, 27, somewhere around there.
Gotcha.
That would have been 3 years into it. So yeah, so about that third year, about when I was about 27 or so, maybe I was maturing or something. I don't know.
Yeah.
That maybe. So to me, focus more on risk management first, and not so much about getting gains all the time.
Right.
So I mean, and risk management could be different for so many different people because there's different risk tolerances. People can be more aggressive. It depends on your pocketbook and how much you want to, if you want to be conservative, or you're a little bit more moderate, or you are aggressive as hell. It just depends on your personality. But take that, and there's nothing wrong with those different personalities. You just have to manage those personalities,
Right.
to where you can live to trade another day, instead of like all of a sudden you're down.
I mean, that's actually really profound what you just said, man. It's all about what you keep, not how much you can make, but what you keep.
Yeah, exactly. So that's what I would really want to focus on earlier in life than it took forever to kind of figure out. So.
I think we all go through that, man.
I think I know, and you tell people that, but they still go through it anyway. I think you just
so
got to
true,
learn,
man. It's
yeah,
so
it's
true.
so weird.
I only know like a couple people who like they just seem to have gotten it right from the get-go, and they can just learn from your mistakes rather than making their own mistakes. But man, it seems like, I don't know, we're just kind of fucked as humans. We just kind of have to make our own mistakes, put your hand on the burning fire, and that's the best way to learn for most people.
Yeah, and the thing is, and I'm glad, and it's kind of a double-edged sword, because I'm kind of glad it is that way, because it's the fear and greed that's kept me employed.
Yeah.
So it is that human nature that's like, okay. So thank you for not looking at risk management for the first 3 to 5 years. But yeah, it's that's where I would have started, is a lot more risk management upfront. So that's.
And also, just out of curiosity, on that topic, do you look at any of the underlying market dynamics or anything like the fear and greed index? Anything like that you care about?
I do, but everything, to me, that's just secondary validations for what I'm looking at.
Okay.
So like if I'm looking at like different indexes like that, or any like at your stuff, like I'll look at your jewel index, or your jewel indicator, just different things like that.
Right.
And I'll say, okay, look, that's validating what I'm looking at, so it gives me a little more comfort. But of course, I got to like the indicator that I'm looking at, and the jewel is something that's good that matches up really well with my stuff, gives me comfort to say, okay, this is saying this, I'm saying this, so 2 heads are better than 1, I guess, and then you go from there. So there are certain ones I look at here and there, but it's all secondary, because I got to stick to my plan first, and then I use those other things for validation. Is really what it kind of boils down to. When it comes to fundamentals, absolutely nothing. I don't look at. I don't give a shit about anything.
That's one of the things that I love about crypto land, man, is you don't have to worry about these all these fucking earning reports and shit like that.
Yeah,
it's so much simpler.
Exactly. Yeah. So I just don't look at them. I mean, I'll look at them and just follow and just learn as things are going on. But when it comes to breaking down my strategy because the fundamentals are doing something, that the indicators will let me know.
Right. Yeah, man. Well, I think we've been doing this for an hour.
Awesome.
Holy shit.
Hey, I can talk to you all day, but yeah,
dude, I know, man. I know. It's a pleasure, my friend. It's a pleasure. But I do want to let you tell everyone where people can find you and all that good stuff.
Oh yeah. I mean, easiest thing, if you want to get into my stuff, is go to FibboSwanny.com. And then just get in there. It has a link to my Patreon if you want to get on there.
We'll have a link in the description.
Yeah. And so FibboSwanny.com, and FibboSwanny everywhere. It's FibboSwanny on Twitter. If you want to follow me on TradingView, every once in a while I'll post some things out on TradingView. But if you want a lot of the different charts and learning the strategy and all that, the Telegram group is what is in the Patreon and the website, because the website has all my charts, and I try to update as much as I can when I can. But then again, I'm a one-man shop, and I have a full-time job because I'm, hedging clients all over the freaking world all day long. So I'm looking at
Jesus Christ.
So I mean, it's the greatest job in the world. I get to do TA and help people. It's awesome. So I'm very busy doing that, but I'm a one-man shop, so I do the best I can. It seems like the group loves the small community that I'm in. I kind of stay under the radar a little bit. I'm not doing a YouTube show or anything like that. I like to be a guest on shows more than anything else. because I really just wanted it to be a tool to help people in their own strategies and from there.
And
So
I can definitely speak to that, man. There's several people from my community that have gone over to yours, and they have only like phenomenally good things to say about it. So definitely check out FibboSwanny. Definitely just check out even his Twitter. I mean, that's good enough as well. But
yeah. I'll
yeah,
post things out on Twitter too.
Absolutely.
Every once in a while, I'll throw videos out. Like I put a video out the other day on that Ethereum that we talked about, so people can kind of get a gist of how I use the shallow fibs. And I go a lot more in depth in the Telegram channel, because that's where people can ask me questions and those kind of things and learn from that. And people have taken it and built some stuff off of it. It's been kind of cool. Like there's a couple guys that actually built some indicators based on my RSI things, and so it's kind of cool. And it's exactly what I wanted. I want people to kind of take it and run with it and build different things. So it's actually kind of cool.
Sweet.
It's fun.
That's the whole point of community, man. Everyone comes together for something better.
Yep.
Alrighty then, brother. Well, it's been an absolute pleasure. Thanks for coming on. We're definitely gonna obviously invite you back, man. You're a phenomenal guest, and thanks again for coming on.
You bet. Awesome. Thank you.